the Chief Global Strategist at City Index. Ashraf Laidi joins us now. Ashraf, great to have you with us this morning. I mean, it's going to be the fastest growth in 3 years, but it's still paltry, isn't it, overall for Europe?
Yes, it is. For France, for year-on-year, we expect to see French GDP at around 0.9%. For Germany, it's expected around 1.4%. Yes, and that is really the story of the euro. Part of the reason that the euro has been strong, you're not really comparing it to 5 years ago, you're not comparing it to the US, but you're comparing it to 3 years ago when we were not sure whether we're going to end the year with the same number of nations that they started with. And so I really think that as long as the GDP is, well over 0.8 or 0.7%, that is really decent news. I think for the people who are in the market are really watching the key thing before they get so sure whether the ECB is actually going to act. Let's not get too ahead of ourselves as we have been doing before the ECB meetings in the last 3 months and wait for those CPI numbers.
Yes.
Everybody who's so sure that they're going to finally cut rates. What if the CPI, the flash CPI that's going to come out on, I believe, on the 2nd of June or the 3rd of June, the flash CPI, is going to go up from 0.7% to 0.9%. And I think that what Draghi has been doing was not really dragging his feet, but he really wanted to see evidence that CPI is actually going to reach a consolidation, and core CPI has actually gone up to 1%.
Can we come up with a simple rule of thumb then for the next couple of months that if CPI goes up to X, the ECB will not do anything, and if it goes down to Y, then the ECB will act? I mean, is it literally, they really are hanging on this one number, are they?
Yes, and I think what Draghi has been doing, people have been saying that he lost the plot, that the ECB has lost the effectiveness in trying to talk down the euro. They want the euro where they have it. It is where they want it to have. And basically what it is, they said, listen, yields are down. We have recovered. Our nations are being upgraded. Why do we have to resort? Why do we have to resort to cutting rates when they are near zero, when things are okay? We're going to have only to resort to this if there is a crisis. Yes, there is a risk of probably disinflation. We need to be convinced before the end of the summer where truly there is a risk of a downside on the price level. If not, let's try to talk down the euro, okay, before we have to act, if we have to act.
But Draghi himself has referred to the value of the euro, certainly in in the last 3 conferences that I've covered. He specifically, it's not a policy tool, but it's referenced there. It is a problem. It's a problem for industry. It's a problem for Europe and the recovery, the value of the currency.
Manus, yes, it is. But do you remember the days when they used the word, the B word for brutal, when we were at 1.47? 1.5? We're not even at 1.4. Yes, it could be strong. It could be bad for a French pharma. But what about the Adidas that you talked about?
They complained about the strength of the euro.
And we've had other CEOs through the door here, down the line here, saying that, and it's in the numbers, right, the strength of the euro is a problem for European industry. Are they just telling porkies?
Draghi, it took him around 2 years to 3 years to save the euro, to reach the stabilization that he wanted. So why is he going to damage all the effort that they did? Look, they're going to wait for the CPI number, okay? Before they are convinced, they're going to try to talk down the euro. And the ECB has many ways to try to intervene. As we have seen, it worked last Thursday. He said that we have probably reached a consensus that we could act next month, and the euro went from 1.39 to 1.37, and this is fine. If, let's say, the CPI is going to go down from 0.7 to 0.4, they will do a symbolic rate cut. But I just want to warn something. If people are so comfortable with the fact that if there will be another LTRO or if there will be a QE, it will be negative for the euro, no. It will be a positive thing for the euro because it will create the liquidity that the euro usually gains from when liquidity goes up in the markets.
Ashraf, thank you. Ashraf Laidi stays with us from City Index. We'll talk more with you, Ashraf, around 6:30 UK time in around 10 minutes when we get those GDP numbers out of France. Lots more.
Let's talk about one disappointing fact, and it is the French GDP. It is a miss. France is stagnating. Just looking into the numbers, government spending rises by 0.4%. Households are spending less. and what you've got here is government spending rising, household spending less, and it's a miss. It's flat. Ashraf, are you? No big shock.
Are you underwhelmed?
Are you underwhelmed? Suitably underwhelmed?
Given that it's coming from France, not really surprised, but I think to save the day is the year-on-year number. I think it's coming in at 0.8%, which is
yes.
fairly expected, fairly equal to the entire year's anticipated GDP of around 0.9%. So what could save the day? Will the Germans save the day again? We're expected to see as high as 2.2% for Q1 year-on-year. That would be the highest level is in around 3.5 years. So if we get, as long as we get something more than 2% from Germany, I think the euro could remain stable above 136.50 until we get that famous CPI number.
In 25 minutes what Germany delivered. We had some other interesting numbers overnight, didn't we, Ashraf? The Japanese GDP number showed the fastest pace of quarterly growth since 2011. Much higher than estimates at 5.9% annualized, but of course there's so many one-off factors because people brought forward spending plans because of the tax hike.
Absolutely.
Even taking that into account, though, do you think this was a strong number?
It was a strong number, but it was really all about consumers running into the shops trying to beat the tax hike. Everybody is expecting a contraction for the Q2, and the question is, will the contraction be bad enough, big enough in trying to get the BOJ back to increase the purchases from 7 trillion per month to around 9 trillion. If we don't see that, then we can see actually in an ironic fashion, we could see the yen regaining its strength. And if yields continue to fall the way they are falling right now in the US, 2.55, then that relationship, falling yields, falling yen crosses, i.e. a rising yen, could be here to stay.
Now, you've got a bit of an interesting philosophy in terms of why the euro is strong, why the dollar is weak, and you say we're all missing an essential trick, and it's to do with 2-year government bond yields.
Right, but it's not only the 2-year differentials, but it's real 2-year. Let's get real here, okay? It's 2-year yields minus inflation, okay? When people try to explain why is the euro stronger when the differentials in Germany are less than the US, it's not that. It's the yields are not high enough given the differential in inflation. So if you take UK 2-year gilts minus UK inflation, we are at 0.8%, 0.8. If you take 2-year yields in the US minus US inflation, we are at minus 0.8%. For the Eurozone, is minus 0.7. What is the bottom here is that interest rates, given where US inflation is, interest rates are not high enough to compensate for the differential. Why? Because Mrs. Yellen is continuing to talk down these yields.
And where do you see the pound going from here? Of course, it came down a little bit yesterday after the inflation report. Is that sustainable,
At the beginning
or does the pound go ever higher?
At the beginning of the year, Anna, we caused some controversy in the office when we said we're expecting 1.7. We think that the pullback right now is going to go towards 1.66 before we go back gently to 1.72.
So you think strengthening of the pound will remain the theme of this year?
Yes.
Okay, Ashraf, thank you very much for joining us today. Ashraf Laidi, Chief Global Strategist at City Index.
Okay, ahead of the